Impala Platinum has reported a 31% fall in revenue for the year to June, while headline earnings halved to R10 a share. Joining us now from the JSE is David Brown. He's CEO of the group. Good afternoon, David.
Good afternoon.
David, you faced a number of headwinds over the past year, including falling metal prices, the volatile rand, and what you call a disappointing safety performance. And of course, some of these headwinds remain as you progress into the current year. Is the worst behind you, though?
Well, I think from the perspective of metal prices, I think we did see the bottoming out of metal prices towards the back end of 2008 calendar year. We have seen the metal prices remain relatively steady during the bulk of this year, 2009. We do anticipate them trading within this range for the next 6 months, and certainly I think as we see sentiment continue to improve and we see consumer end demand begin to pick up into 2010, I think we will see a more positive pricing environment. The unfortunate factor that is probably still with us is obviously the rand-dollar exchange rate, and that has remained stubbornly strong from an exporter's point of view, and quite clearly I'm not sure whether we're over that in the short term. From a production standpoint, I think we are certainly at a bottom, and we will see an improvement over the next 5 years.
Of course, we do know that car sales fell off a cliff last year, and initiatives like the cash for clunkers in the United States have helped to support that market. What other factors do you see supporting the platinum price this year?
Well, I think this year has been supported by very strong Chinese jewellery purchases. We are anticipating seeing Chinese jewellery up very significantly 2009 over 2008. We've also seen at lower prices a resurgence of investment, particularly coming out of the Japanese market. So these two factors have certainly helped to buoy, shall we say, the demand destruction in the automobile sector, particularly coming from Western Europe and the United States. We have obviously seen increased automobile production in some of the other parts of the world, and that's obviously also helped to offset, particularly say from a place like China.
David, you said you expected prices to remain steady for about the next 6 months. Where do you expect them to go after that?
Well, hopefully upwards. Certainly, I think what we will see is obviously on the back of quite strong Chinese demand, particularly in the jewellery sector. We are obviously optimistic that we will see the automobile sector begin to improve during 2010 as consumer confidence begins to pick up. We will see that then begin to put pressure on demand, and ultimately, while we see an increase in demand, we'll obviously see a flow through in terms of increased pricing environment as well.
What are we talking here? Are we talking about $2,000 an ounce? Do you think we could get back to last year's levels even?
Look, I wouldn't necessarily say that next year we would see those sort of pricing levels. I mean, quite clearly the recession has been very marked. You did mention earlier cash for clunkers, etc. Obviously we are partially concerned that that might have just been bringing forward some sales that would have taken place in 2010, and obviously we aren't sure of the full impact that will have on the 2010 sales and hence production for automobiles. But certainly I think it will be higher than the $1,300 level, but I certainly don't think it will get to the 2,000 level during the course of the 2010 calendar year.
Now, of course, we have seen platinum miners stopping investments in new capacity due to the economic crisis of the past year. As demand picks up, do you think we're going to be hit with supply constraints?
Absolutely. Quite clearly there has been a significant cutback in terms of the new wave of production that was meant to come onto the market. Just from the junior sector alone, there was anticipation of close to 1 million platinum ounces to come to the market at some stage. In addition, the majors such as Anglo Platinum, Impala, ourselves, and obviously Lonmin, we have seen cutbacks in primary platinum production as well as coming out of Norilsk. So I think you are seeing the potential for higher prices as a result of lower supply and obviously increased demand going forward in 2010.
How quickly can the industry respond to this demand though, and get that investment back on track?
Yeah, I think it's actually something that people aren't always aware. In essence, it's actually quite difficult for a quick response. Particularly if you've closed or mothballed operations, It's not an instant startup. It can take somewhere between 6 and 12 months for the operation to start up, bearing in mind that you've laid off staff, so you're going to have to rehire, retrain, obviously make sure that the mine area is safe again. So it's not just a quick process. And also mining projects per se, if you start from start to scratch, are anywhere from 3 to 10 years, depending on complexity, depth, and the size of the operation that you're going to be building.
Of course, something that could affect production in the short term is the strike at your Rustenburg mine. We had the National Union of Mine Workers saying that this could spread to all your other operations. Is that likely? What's happening with those negotiations, David?
Well, the current industrial action at Impala is obviously very disappointing from our perspective. Quite clearly on Saturday night, we had concluded a deal between ourselves and the union to the extent that there was a suspension of the strike notice given to us by the union. So we were very surprised on Monday to find that the members and the workforce reacted negatively. I must emphasise this, not all the workforce, it's part of the workforce reacted negatively to the offer that we concluded on Saturday. And I suppose we were even more surprised yesterday when the union put on increased demands. These demands are in the order of 14% increase. They're looking for housing and transportation allowances. And I think once you put all those things into context, we're extremely disappointed, because quite clearly with CPI coming out yesterday at 6.7%, a 14% plus demand is more than double the inflation rate, which quite clearly is not reasonable. And I think also if you contextualise those demands in relation to other deals that have been settled in the recent past, again, it just doesn't make sense. The current situation is we're at an impasse, and certainly those the workers are not back at work. We are losing approximately about 3,500 platinum ounces a day, which has a revenue impact of about 50 million rand a day. So quite clearly this action is not beneficial for the workers or for the company at this stage.
Now, David, you were quoted in the wire services this morning as saying that Implats has the option of mass dismissals. We do have the National Union of Mine Workers, though, this afternoon saying that it's a legal protected strike and you would need an interdict if you wanted to fire those workers. What's your position on that?
Well, I think obviously I'm not privy to what the union have said to you earlier today. Quite clearly, considering we had concluded an agreement on Saturday night and that we had suspension of strike notice, as far as we were concerned on Monday, we were in the realms of unprotected illegal strike. And quite clearly we would need to follow the legal process that is due to us.